Live on YouTube.
Yes, indeed. I'm just starting now.
Right, are we on? Are we? Everyone see my
Just
screen?
bear me 2 seconds. I'm just moving over to screen. Yep, done. Perfect.
Feel a bit rusty now. I hadn't been in for chat for a bit.
No feeling, mate. No feeling.
That's because I didn't make your coffee.
Yeah. You're getting sacked.
Not again. David already done that once to me today.
Yeah. Well, has he sacked you?
Yeah.
I can't sack him. He's doing my calendar. Don't know where I'm going without him.
I'm still coming back for you, though. Don't worry.
Right. Hello. You're on YouTube. Hello, everybody. We were here with Scope talking about smart money. I'll leave it over to you. I'll turn off the mic.
Evening, everyone. So, or wherever you, or morning, or wherever you're from. So, first live back of 2023. Hope you've all had a good Christmas and New Year. I did. Went straight back to work day after Boxing Day, and back home like yesterday. So, right. Obviously, I'm not going to be able to give you like loads of trades. Let me just change. Yeah, I'm not going to be able to give you lots of trades like before. Obviously, has been this. I have updated my channel and changed it to where there's no comments in it, because if I show you here, this was the course and it's just been absolutely rammed. Things that's in it. Scroll all the way up. So the last point that I got to before Christmas and before I stopped trading, December. Let me just find it. Say. Quite a lot in here. Just go through, sift through. So the last thing I got to was showing people follow the trend and break the trend. And it was shared in here and people have used that so far. But this is where I left off. And then obviously everybody's just absolutely chat. So everything from here up, I have moved into a new channel, and this is just literally everything. I've took a few things out. I had loads of P&Ls and stuff like that. I've took them out, so you just get literally all the information you need. So it's easier for you to find. David's going to make this read only for me after this stream, so everybody can go into it and you can just can download, or you can just find things so much easier. So where I left off was here. This was last year now. This was the SMC map for follow the trend. Obviously, you all know about that. Been practicing in that, but like I say, December has been absolutely horrendous, so there's not been much trading from me. I have had most of December. I've had limit orders waiting, and I've just literally tonight, when I've got back to my PC, I've cancelled all my limit orders, and I'm just gonna start afresh. Did, however, do one tonight, and I'm about 30-40% up. So we all know about this. Follow the trend, and then did break the trend. The difference between follow the trend and break the trend is the imbalance in the breakout wave, the breaker structure wave. It's this one here. Follow the trend, just the same, but without balance. So this is what you want to look at. The three waves, the 1A, 2B, 3C. These are your breakout waves for your break the trend with smart money. And I've also today added some. I've added bits of a new course to this course that I'm planning, and it's not SMC, it's not smart money, it's not smart money. So you combine it with smart money, and I'll get through it on in the video. So with break the trend, literally all you just need balances, waves, breakout wave, balance all the way wave, no structure, straight break, fib from there to there, candle there, count wave with imbalance in both pulse 1 and pulse 2. You fib from low to the high, both waves from here to here, because there is imbalance still left in this bottom. And obviously, as we all know, imbalance or fair value gaps, a lot of the times they get filled. If there's really little small imbalances in this pulse wave 1, then there's no need to, well, I say there's no need, but for me personally, if it's a small imbalance, I don't bother with it. I don't mess about with it, because it's not, if it's a small imbalance, the signal's not very strong. The bigger the imbalance, the bigger the signal. I explained that previously on further up in the course, near the start of the course, how to judge the power of an imbalance. Go back and have a look at that. We've got the breakout wave with imbalance only in pulse wave 2, because this one has been pulled back and the imbalance has been filled, or there's no imbalance. There's no imbalance or being filled. So then what you do then is you just this low, this high. It's all playing here. This is a live chart. Sorry. I think this is from BTC. I'm not too sure because I don't involve the prices at the side. But I'm pretty sure it would be BTC or Ethereum. So if you go back to here, the wave that we're looking at, see, the pulse wave 1's imbalance being filled, or there isn't none. There's only balance pulse wave 2. the wave that we're looking at there, as said, there is 3C fib, wave 2 for institutional candle. So what I did here is, see, there's no imbalances in here. There might be a little minor one here. Look, this is what I marked out, little minor ones. But for me, they're not a strong enough signal. I mean, the candle here is a strongish rest. It's a strongish candle, leaving the tiniest bit of imbalance. This has come back to fill it. So what you do then is if you want to still use these imbalances, I don't, because it's not strong enough, as I said before. You could fib from here to here, but because I don't use them, I just fib from there to there. And then obviously I get my point of interest. What here? Obviously, this is not an opposite candle. I would have dropped a time frame to find the candle. Obviously, we all know we all know, obviously, when you see this move here like this, and then you see this candle like this, obviously with a candle this size compared to the rest, if you drop down in time frame, this candle will be lower time frame, will be an opposite candle. So found my POI there. So this is the same chart. Now, if you would have fibbed from here to here, and you would have been waiting for these imbalances to fill, say they're not very strong signals. If these were massive signals, then the price may fly down to them. But because they're not massive signals, then obviously I found my here. Excuse me. And once it's touched, I'm marking out my BOS on minutes. And then I'm marking out the POI here. Marked it out here. Obviously, I've had to time frame. Yeah. It doesn't show the clearest, but as you can see, there's a POI 50 there, and you see the price came down, went into it, targeting CT. Fair trade there. All these trades will be in this SMC with scopes, but that's the one that's overrun with all comments and that. So I'm just going to stick all the normal stuff and all the stuff that's relevant to people and all the stuff that people need just in this SMC course. So gone through the steps here. Slight imbalance, exactly I've just explained. I didn't even remember to put these in there. Slight imbalance left in pulse wave 1. If you want to be that precise, you can also mark out key level. Obviously, I've left it as a POI buy, but it's this should be a key level box. And that's if the next point was this. This is a breaker structure level, also level. So the difference between marking a key level, forget that says POI. The difference between marking a key level and a POI is smart money. Key level, just say retail like that, but POI is smart money. Level is actually the most important low. Break that, but definitely down to this. So once I've got in from this POI, TP is optional. You can use the recent structure, which is the next that would be your next point there. Or you could go onto the hourly time frame. I mean, we're on the hourly here, sorry. Would go to the 4 hourly. find a high on the 4-hourly, but a lot of the times they're the same. They're going to be around the same. As you can see here, this is what I mean about, this is why I have started to put POIs and level breaker structure bouncers. So this shows the structure bounce, can enter on the breaker structure bounce, and the key level. That's all that it is. It's obviously, you can see in the last picture here what I shared. The optional, it's that trade, the small trade, took that trade, targeted high, target area, targeted there, profit, tiny stop loss, 7. But at the same time, marked out the key level as well. And this is where is an important low. So, like I said, if this failed, this would be a backup plan. This is win exactly all that, all in one. So this is the better trade. Obviously, that's still a good trade. You still make profit, and you can, you know, if you're following it nicely and you're following it cleanly, it's you're going to get decent risk to rewards. I mean, size of the stop loss to the TPs. So this now is, say here, the key level. Took the profit there, then it's come down. Could have got an entry into there. You could have got an entry into here to come down to this POI. Somebody asked me yesterday, I don't know whether it was Marco or Bavo, do I ever trade the pullbacks to take it back to the POI? So obviously counter trade. I do sometimes, but sometimes what happens is when you see, like, just take this this for example, when you see this one move here, and then you start seeing a pullback, you might think, right, that's going to pull back to this institutional candle or this area or the discount zone. But what happens is when you fib from there to there, it only pulls back to the 30, the 30% mark. And you notice in what I've said recently in my account premium, price only pulls back to here. Don't buy or don't sell. It's not a strong enough pullback. So this meaning that if we get this big pulse and then we only get pulled back to there, a lot of the times this is not, only pulls back to there and starts moving back up. It's not over, that it can go higher. So this proves what I was saying. So here, if you fibbed from there to there, this would have come down to about the 30 zone. And like I said, it's not a strong enough pullback to try and take a trade or to try and even short. It's not, you know, there's nothing clear. Trading's hard enough, so really need to use, I'm not saying these rules, you can use your own rules, but you really need to have rules in place to stop you making silly things like this. Oh, look at this big imbalance here, look at this balance here. We're definitely starting to pull back. We're going to pull back into this imbalance down. We'll short this all the way down here. So what happens then is this stops you, this kind of trading and these kind of rules where I'm not doing anything when pullbacks to here. They're keeping me out of crap trades, and obviously they're keeping my funds secure. So that's that one. So now the price has come back down to here. This is the key level. Even after an institutional candle on this one, you still mark out your BOS. Even same as with a key level. Key level is just like the strong buying zone, strong selling zone, or supply and demand area. It's literally like just another order block. But you still do wait for price to break the 50. You still mark out once you've touched it. You do the same double order block. Obviously, you're doing double order block for a better risk to reward, or that's what you're aiming for. You can see in this trade it works nicely, decent risk to reward. So even though we're still touching a key level, this is a key level, and obviously there's a break of structure line across here. So if it broke that structure, then we go down because that's the most important low. So it's just literally bounced off of there, and then we push back up. So we're seeing the break of structure here. We're marking that out because we're dropping time frames. Find the most recent pullback. Done that. We broke that structure. Found the institutional candle on the lower time frame. This is meant to get you a better risk to reward, but like I say, this is the hourly trade. This stop loss, that stop loss. The hourly would have been a better trade at this time, but this is more confirmed, safer entry. It does, yeah, massive move up. Candle, pulse 1, 2. See this candle has just got a bit smaller than these. You see, you start getting wicks up here. So obviously that means smart money has entered the market. It's up. Waves. Momentum started dropping. There's no more sellers or buyers to keep moving. Start coming back down. Pull back. We've already got this marked out. We've had this marked out for hours and hours or days and days before. You've already got this marked out. Got entry if you wanted to take the entry, 30%, stop loss just below, and in this purple area would be in the 4 hourly or something like that. Another recent high. Like I say, break the trend is similar to follow the trend. The only difference is the BOS waves, the imbalance. So now this is what I've been explaining here. Break a structure line, break a structure bounce. So this is what you're going to be marking out as your key level or something like that, or just your order block. That's because the reason you're marking this key level out is because the imbalance has already been filled. So you can't get institutional candle, because if you get the reason you get an institutional candle is because of balances and smart money. Whereas if it's been filled or there is no balance, that means there's no smart money left, or there's no smart money there, or there's no signal for you to mark out. That's why you're marking the key levels out. The difference is when you've got when the price reaches this area, you're still waiting for this, but you're ideally for the trade to work. This is the reason for the trade to work. This is the power for the trade to work. This is the confirmation. This breaker structure on the 15 minutes. This is a confirmation trade to work. So when you're coming down and like you see, it's come up here. It's filled this little bit of imbalance here. So as you're coming down to this key level, the imbalances, there's no imbalance because you see all the wicks. There's one imbalance here. It's been filled already, and then it comes back down. So there's no imbalance coming down to it, or it's already been filled. So this means this is a key level. You want, ideally, once you touch it, you want imbalance after it's touched and when it's broke, you want imbalance in the breakout wave, in the breaker structure wave. You want imbalance pushing up to that breaker structure. You don't need imbalance coming down, but you need imbalance going up. You don't need imbalance, but it's the strongest case to have imbalance, because that means that there's power in this area, because look at the move it's come across, and you get your institutional candle. So after the institutional candle, you've got imbalance here, you've got imbalances here, and you've got imbalances here. So that means there's more weight this than there would be in this. Even though you've had a nice touch off it, you really want your low time frame imbalances to show your power, to have a bit more confidence in the trade. And as stated here, the breaker structure bounce that we've just gone over, it's just like your original order block. And when it hits it, you are in the high time frame, we can look for the POI and the low time frame. Exactly what we did in that picture I've just showed you. BOS bounce strat is just key levels, high buy-in or selling zones in the chart. So it's just highs and lows of the market. It's just like your original order blocks, what everybody used to use. That's what it's like. The power of the double order block zone, and that doesn't mean just what I'm showing you here with the BOS bounce. That means all of it. That means break the trend. That means follow the trend, because you're obviously looking for 2 order blocks or 2 POIs. So this goes for everything, every bit of this trading strategy, all at once. Key levels, recent high and low of the market, can be strong buy and sell zones. POI zones, smart money concepts, because of the imbalance. It's not smart money if there's no imbalance. Only smart money can make imbalances happen. And then this one is, if you get one big move up, like, see if I get one on chart. If you have, so just say you have one big move up like that, with no structure, just one big move up like that. This means that this will almost always be oversold. That is all that this means. But obviously you need a bit more experience in it. It's a bit more risky, but this is for if you're following like a specific stock, coin, pair, or anything like that, and you know how it works and you know how it runs and that. So it's the recent high or recent low of overbought or oversold. This means that if the market has done one big run in either direction, it will be overbought or oversold. When a little pullback happens, mark the high or the low and set a limit order for when and if the price comes back to test this high or this low. It needs more experience. So if you have big massive move up, just say you've got this is the top of the candle, and you have like a little pullback here with at least 2 continuous down candles. If it's an up movement, 2 continuous down candles, you know that then is this here, then is valid high. So what you can do is look at previous structure before, see if it's got a reason to go down, see if there's a sell zone there, or just see other structures or anything like that. And if it's absolutely hammered, then what you can do then when you see these 2 continuous candles coming down is you can literally set, like I say, you need more experience for this there, or you can have it, if you've got a POI here, you can have it there. But you can actually set that as a limit order, and the higher time frame, target around this area. The discount premium, you chart target. But I am not gonna go over this too much because, like I say, it needs more of experience, an experienced trader, or you need to know how the specific pair or coin or whatever you're trading, you need to know how it works or whatever. It's more risky because a lot of people just jump in and how far it's moved, and you need a bit more just to. And then you've got your traditional supply and demand. Why we should use the double order block strat. So why we should use this full strategy. This full, I'm not trying to sell anything to you, but the reason is gone over the double order block or POI key level high time frame of these. Just the reason, the power cornerstone. So the higher time frame, POI, just the reason that trade not got to work, but the reason that trade will work, or that is the power for that trade to work. Whether it's hit your order, your POI, your order block, your key level, just a signal for us that maybe the trade will work. The reason we wait for the second POI is for the higher win rate keeps you out of bad trades a lot of the time. So now this means that, and it's in the it's in my chat. The first one that I did, people have been jumping in on the hourly time frames. Like I've been trading hour and 15 minutes, 15-minute entries, hourly POIs. And there's a lot of people just been jumping straight in on the hourly without waiting for the second order block or second POI from a breaker structure on the lower time frame. And then they're getting stopped out quite often. I mean, sometimes they work, but if you're waiting for that second POI or order block, keep you out of bad trades, because if you get a big push down or push up, whichever you want to call it, and then it comes back down, it touches your high time frame POI. So then you mark out your low time frame breaker structure, waiting for this to break. A lot of the times, if you would have entered on this hourly POI or this bit high time frame POI, you don't get the breaker structure. It just goes up to test it and then comes, or goes up just below it and then comes straight back down. So that's why I always wait for the two order blocks, and just the reason why as well, people just rush things. There's no point to rush. If you're trading and you want to be trading for a long time, why would you rush trading when you've got rest, you've got another year, or you've got another 2 years? You know, you can trade for a full year and just use, I don't know, just use the hourly order block. If and you'll just end up losing money. I'd say you would anyway. I don't know if you would. I'd say you'd lose money. So loads of time, wait for the setups, be patient, meet your criteria, don't take. Second, obviously with that, it's for the higher risk to reward and the smaller stop losses. And another thing, an important one, I think, which is to show that the low time frame and the high time frame are both synced together, meaning obviously the 15-minute pullback will be, I mean, the 15-minute downtrend will just be an hourly pullback into the POI. So then when you get your 15-minute breaker structure, then that will be your hourly time frame and your 15-minute time frame both synced together, making more possibility for a winning trade. Just give me 1 second. sorry, I just had to let my dog out. He's walking around behind me. Now, these are optional. These are like how a professional would trade in this manner, with this kind of trading style. This is how people in prop firms trade. Like this. So I know it don't sound. I don't like to. I'd like more than one good trade a week. But if you're trading in the 15-minute and the 5-minute for entry, 1 week you'll be looking for one good trade. 1 hour POIs, 15-minute entries, one good trade in the month. 4 hour, 1 hour, 4 weeks, one good trade. If you've got a risk to reward that's higher than 3, and probably just say 10, so you've got a 3 RR to a 10 RR, either one, then you're gonna, over the course of a year, you will make profit if you're just looking for these perfect setups. If you enter a trade with 2% of your account, this means you're gonna have after one trade 6% to 20% gain on your account. So if you're just say you're having one trade on 5 and 15 minutes a week, so you could potentially be, if you get the right trade and you follow the rules, or you follow if you've got some better rules to put in with this, to implement with it, you get one good trade in 1 week. That's potentially I don't know, 80% gain on account in 1 month if you're doing it 5 to 15 minutes. Oh, dog. 1 second. Right, dogs would have them.
No.
So yeah. So yeah, so you could potentially be being, if you're having one good trade a week with a 5 to 15 minutes, so that's 4 good trades a month, you could potentially be gaining 80% gain on account in the month. And this is why I say wait for the double order block, because, or wait, don't just jump on the high time frame. You work that out over a year, 80% gain a month. You in a year's time, if you take your time and look for the perfect setups. I don't think a perfect setup exists, but if you look for the good setups, or you follow your rules nicely, then you'll find after a year you're gonna be doing okay. Yeah. Yeah. So these are from here is new, from what you didn't know. So now I'll go on to my extra bits, what I have in this course. And this is the market cycle theory. You can use it for 2 purposes: to confirm the trend power and to set potential targets for each trade or each movement. Or if you're just following a market, you're gonna, if you're back testing, you can just follow and see if it works. So this is what I tend to try and follow. And there is, I think, 3 trades probably 2 months ago in my other channel with exactly what there is a few trades in here, and I had a run through about exactly what I'm saying there, what I'm saying here. And I was saying, while I was in the trade, we broke this, now we're going to target this. So if we're breaking that, we'll target that. So this is what I was saying here: if you get the breaker structure in any of these, this is what this is what a good target would be and a safe target would be. So I know people want higher, want to hold out the wins, want to hold out the trades for as long as they can. You can leave some on, of course you can, but a good idea would be to target the next time frame up. So if you get breaker structure in the hourly, you target the 4 hour high or low, whichever way the breaker structure is. So the reason that you'll be targeting the 1 hour high or low, or the 4 hour high or low, or the time frame up, is because the breaker structure in the 15-minute, that is only at that time a breaker structure in the 15 minutes. The 1 hour breaker structure line is still valid, and it's still working, and it's still in play, because obviously it's not been broken yet. So that's why a good target would be the hourly breaker structure. But in theory, this is why it's theory. In theory, if you're breaking the 15-minute, you'll be hitting there 1 hourly, whether you break that 1 hourly or not. If you break the 1 hourly, then you could be looking at the 4 hourly, and so on. But as I say, the next low or the next breaker structure on the higher time frame to what you've got the breaker structure in, that is the good target to be taken. So when you're going through your market structure, market cycle theory, the first step is you want to be defining trend with the high, high, low, high, high, to find your breaker structure lines. You can break any of these breakers. If you can break any of these, then obviously that's when you're probably facing a change in trend, and that's when you'll be looking at other targets. So for this instance, this is just a little diagram I put together. Break of this 15-minute structure. This is the hourly structure. Break of this 15-minute structure, and you will be looking at TPing around the 1 hourly, because that's still in play, and that is still key level. It's still a key level. So where we come from, up here, you've got a breaker structure here coming down, but this is still in play. It's a key level. So if this is a 15-minute break, you can target the last hourly, because it's still in play. And like that, exactly like that. If you can get in on this breakout, if it breaks structure, you wait for a little pullback. If you can get in, if there's imbalance in this breakout, fib the wave, find your institutional candle, target in here or just above, makes for a decent trade. So what I try and do is, obviously, you all know about when I've been trading the 1 hour and the 15 minutes. I've been watching the pullbacks on the 15 minutes. Obviously, this is the wave that you want to be caring about. This is the 4 hour structure. The red line's a 4 hour structure. This one's the 1 hour structure. So when you're getting, like, just say you get in your breaks on a 4 hour, you want to have this marked. This is your 4 hour. Then you look at this wave, mark this breaker structure out on the 4 hour, because you've had 2 continuous candles going up. You want to be marking this out as your breaker structure on the 4 hour. When you see them 2 candles, then you can literally switch to an hour or whatever time frame corresponds to what you're trading. Hour, 15 minutes, 5 minutes, 15 minutes, whatever. So you can literally drop down now after you see a few candles and you know that this now is a valid breaker structure. You can watch this play out in the hourly, and then obviously be marking out BOSs as they're coming, as they're going. You see this moving. So this is the most recent breaker structure line on the hourly. That's the most recent breaker structure line on the 4 hourly. This breaker structure line there, and you could target down here to this key level. And it'll just be an order block, it'll be an area. And as I say again, it's still in play, this breaker structure, because it's not been touched. It's still in play, therefore making it a key level target. The difference between breaker structure, key level, and the POI is obviously the key levels are, like you already know, we've gone over it a couple of times. It's when there's no imbalance or the imbalance has been filled. So if there's no imbalance, it means that smart money isn't in the market at that time. So if you've got like no imbalance, or you've got wicks, obviously smart money is not in that market at that time. And you're either doing two things: you're either ranging, or you're just causing loads of wicks and you're not really moving anywhere. If you're in a trade, boring. So that's the difference between there's no imbalance or the imbalance has been filled, and then there's no more imbalance after it's been filled. It's just little small wicks. So this is why we use then key levels. We mark key levels out when there's no balance, therefore smart money isn't there. If there was imbalance in that area, this wouldn't be a key level. This would just be considered a breaker structure line. So if there's imbalance, if there's no imbalance, if there's imbalance in here, then this would be just a breaker structure line. If there's no imbalance in here, this would be just a key level or an order block. But that's just how it is. There's no how to explain that. But if there's no imbalance, we class it as, we'll play this as a key level. If there is imbalance in the wave, that means smart money is there. That means smart money will probably pull back to a 61.8 into institutional candle, 61.8 to 80%, and then push back up. Smart money, the original move from smart money is going up, causing imbalances in this wave. So naturally, it wants to come back down, fill in balances around the 60 area, and then push back up. But whereas if there's no imbalance, all the way back down. If there's no imbalance in here, you cannot identify or you cannot find an institution, because the imbalance is the signal that smart money's there. The big candles, and the imbalance, that's where smart money is. That's when you look for institutions. When there's no imbalance, key levels. So without imbalance in the wave, it's a key level. With imbalance in the wave, it's a breaker structure line. POI zone is the institutional candle, the order block, and the 61.8 fib level from the key level high or low in the current leg. So obviously, it's just high. The low to the high, 61.8. That would be an institutional candle if there were imbalance in this wave. That's when you would define an institution. This is how you define. This is how you draw them on chart. No imbalance in this wave. No imbalance in this wave. Therefore, it becomes key level. When you're pulling back from here, this is the most important recent low turning point. That's either a level where it's going to bounce off, go back in the same direction, BOS bounce, or it's going to go straight back through it. You're going to have to reevaluate. That's with structure, and with no structure, this is with no, but this should be no imbalance. If there's no structure like this, is a pulse 1, pullback 1, pulse 2. If there's no structure and it's just one move, but there's no imbalance in the wave, this would still be the low, still be the turning point or the most recent important low. That would still be a key level. The POI zone, this is for smart money. This is when there's structure, there's no imbalance in the first pulse wave 1 because it's already been filled. If you look back, if you remember when I said where they gone? If you look here, wave 1, pulse wave 2, pulse wave 2, no imbalance in pulse wave 1, or it's already been filled. Only fib this. So all this, you can go back and check it. No imbalance. So you would just fib from here to here because there's imbalance in this wave. You don't fib this wave because there's no imbalance. If you can only find the institutional candle when there's imbalance, because that's only where an institutional candle is from. Following smart money, which are like institutions and stuff like that. So that is an institution because there's imbalance. So when you found that, you mark it out, and then you're waiting for the touch of that, and then a breaker structure on the 15 minutes. Failing this, if this fails, you then have your key level marked out still. This is combining key level and smart money together. This is combining smart money and retail traders, if you will, or however you want to call it, both together at the same time. So if you're failing one, you're waiting for the other to see if we can get this, then a breaker structure again on the lower time frame. This is if there is imbalance in both waves. Obviously, this is smart money still. So with smart money, the smart money, if there's imbalances or fair value gaps still in here that haven't been filled, I know this looks like it's filled, but there could be imbalance, a big imbalance down here. What could be filled? You fib from here, here. The most recent low will be your order block, your key level. You can have a reaction from that. But you will find your institutional candle, because you've fibbed from the low to the high, very high. You will find your institutional candle still in the 61.8 to the 80% region, but you are still marking this as your key level because they could just come here, bounce off there, and never touch until a long time. But that's why it's old. So in my recent chats with people, I said I was going to go over the Wyckoff and the Elliott wave. This is just a quick. I'm not going to leave this like this. I'll have an explanation to it all, and I'll have like probably, some little drawings like that, so you can better understand what I'm trying to say. But with the Wyckoff, I don't know if any of you have remembered when I was saying why would you want to mark all this out or try and understand all this when you don't need? I know people might want to, but for me, trading's hard enough. If anybody tells you trading's easy, backside, I think it's hard enough. So I wouldn't really want to be marking all this out at all. So what you are doing here, Wyckoff, and you are watching this is your main structure down. So if you remember in my course, you're marking these out as your CTSs, these out as your BOSs. This one's a CTS, this one's a BTS, this one's a CTS. So the most recent breaker structure here, the most recent CTS is here. This is on the Wyckoff. Now you get all this here. These two lines are just showing a range, and if you go back into this course up, you'll find how to find the ranges and stuff like that, and breakouts and stuff like that. I've gone over it a bit, of course, and I've gone over it in detail in my SMC with scopes, which is now overrun. So for me, what I would do, and if you remember back in my other live streams, I've always said, always, not always it works, but majority of the time it works. The first break of a range normally goes in the opposite direction and breaks back up. So for me, what I do if I see anything like this is I'm not going to mark up this and say that's a break and this is a break, because if that's the case, then here's the example that you would have lost this trade. So you're following it down, you've got your most recent low, you've got your most recent high. You've created another here, but as you can see from this pullback, you can see here, this one pullback breaks the CTS. This one pullback breaks the CTS. This one down, pullback, fails to break the CTS. So for me, if it doesn't break this, it's breaking this. So I know it could be a long time you'll be waiting, depends on what time frame you're on. You could be waiting a long time for this to happen, but this is where this trading style, what I do, keeps you out of bad trades, because you've got a pullback here, and it might have pulled back into a good area for you, but when you've come back down, you've failed to break this. And from the start of the course and from the start of me sharing this kind of material with people, I've always said, if you're not breaking this, you're breaking that. If you're not breaking that, you're breaking this. But now, because we've pulled back and then we've come to here and then we're slowly messing about in here, this now becomes a range. So what I would want to happen is I would not want to trade in here. The reason why is because you see this hasn't, this is a decent pullback. It's a valid pullback, yes, but we haven't broke this. So now what happens is you're following this market, and now you get a break here of this. So now you're thinking market's reversing. This is why it's horrible to trade ranges. So you have your break here, and so automatically you think, right, we've got pulse wave 1, a little pullback, pulse wave 2 from my trading style. But what happens is, because you've not broke this, and you've not broke this, and you're just in the middle of it, this is all internal. This is not, it's not clear enough. And a lot of people who have been in my thing, in my course, or I've spoke to over the last, like, say, few months, I've always said, there's no clear structure. If it does anything like this, to me, it's not clear enough structure. I have this marked and this marked. These are the main areas where I want to break, or I want to see what happens in these areas. So if you've got this break, following my course, people would have thought, yep, that's exactly how Scopes explains it. Pulse wave 1, pulse wave 2, pullback, pulse wave 2, broke that structure. Now we're going to go straight up. So if you would have just followed this, if you're following like the Wyckoff theory and stuff, you would have fibbed from here to here, got an institutional candle, and you've got one here and you've got one here. Guess what? It fails both times. This one fails and this one fails. That's because this and this line, these are the lines you want to be broken. So all this area, to me, it's not worth a trade. Maybe if you wanted to drop time frame, you could get some, but for me, it's too risky and nothing's clear. And I've got years of trading, so I don't need to be messing about and trying to mark all this out and be all complicated. You got your first break here, and I always say the first break, big break of this, it always goes in the opposite direction. So we're still in this range. It's broke. obviously it could have been a failed break. So then you break the range here up to the top, and you've got this exactly how my course explains as well. You've got this pulse 1, pullback, pulse 2. Now you can trade this from this to this. You could fib there to there or there to there. You could do it. But for me, this, when I say you only need phase A and phase D, that is all you need. Phase A and phase D. I don't, Wyckoff might entertain some people, but doesn't entertain me. It's just, I don't know, it's just not for me, not at all. Not when I can just literally blank everything out here and just use that line and that line. For me, that's perfect. I don't need none of this. I don't need none of this. Oh, we're getting some, we broke structure here, we broke structure here. It's all internal. It don't matter to me. It's not, I'm not interested. So you can trade that break there, but you would probably get a win from that. But for me, this is what I need. When phase D happens, when it breaks this, the most recent, the important move from this is a full move. All this is inside, it's just a little range. So these are what I look for. And if you look at all my drawings, what I've done before, this line and this line, I put a yellow box here, and that means I'm not trading. That when I put a yellow box in between here, and it's up in this course, at the top of this course, if I put a yellow box there, I'm waiting for break out of that box, or I'm waiting for break of this. So once you break this nicely, then you can literally use this, break the trend. If you're following Wyckoff and want to know, I'm not saying I know exactly how to trade Wyckoff or draw it all out or this or that. I'm just showing you the simplest thing to do with this kind of price action is literally wait for when if you're marking out or you're seeing it phase A, marking out B, break a structure line and your CTS line, then you're waiting for phase D. You're waiting for one of these lines to be broken. Anything in between, risky, boring. So I will be able to. It's nothing to me. Elliott wave. This is the final one, and I'll just and then after that I'll go over a couple of trades I've had this week. So for the Elliott wave, and I know I asked David for his indicator for the Elliott wave, so I could on my put it onto my channel for people to use. So if you remember from my previous live streams for the Elliott wave, not ABC, that's Johnny's game, but for me, for SMC and this style of trading, the only thing that I am bothered about is the wave 2, this wave here. That's all I'm bothered about. I'm waiting for this. So it normally has 2 pullbacks and 3 pulses. Now, a lot of people would want to be in here, or want to be. It'd be nice to be able to get into here and then ride it up to the top. But for me, smart money, and I found it works. It works so much better, and I'm not worrying about. I used to think I need to be in down here somewhere. I'm not worried about that anymore. I don't trade like that. I used to think I needed to get highest win rates or highest percentage or highest gains. For me, as I said in previous streams, wave 1, pullback, that is your signal. People would try and enter here. For me, that's just a signal. So imbalance in this wave, pullback, maybe filled the imbalance, maybe be a bit of imbalance left. What I want to see then is this. this break, this CTS line. This is your BOS line. This is your CTS. So you're breaking CTS, you're continuing the structure, pushing up. And then when I see two candles on this, two opposite candles together, not spread apart, not like bearish, bullish, bullish, bearish, bullish, or bearish, 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 or just too bearish, and then I know that is then valid structure point. So what I want to do is I want to get in around here, and I want to take profit around up here. And you'll notice that after the signal, this wave's massive. This shows you smart money's in the market because it's imbalance in here, and also pulse wave 2 shows you imbalances in the market. I mean, shows you smart money's in the market with imbalances in this wave, and normally this pulse wave 2 is normally the biggest wave. Therefore, you're going to get the bigger candles and you're going to get the bigger imbalances in this wave as compared to this and this. This is your signal. This is where smart money pushes. And then when you see, when a lot of people see a big wave like this compared to this one, they'll automatically think we're pulling back down now to come down. For me, that is smart money's there. That is the biggest wave out of all of these. That's where it's going. The price is going. So I'll be waiting then for an entry here, and I'll be taking profit around here. So when we see this wave 5, I know you want to be taking profit at the top, but it don't matter if you're going to be taking profit starts coming down or just before it gets to the top. You know you can easily target way past, but you can target past that. The way that I try and figure out when to take is when the candles start doing all the wicks and that. So if I was in here, sorry, this is an actual tuck, but if I was in here, you see the big push up, you see a little range. This is only the lowest point. That's a pullback. That would be only to literally probably less than 30. So that's less than the 30, the pullback. And what they always say, if it pulls only back to the 30, I'm not interested. You've still got more to go. So what I would normally do is when I am waiting to take, I would normally, for me, I would have probably been out. If you look back on previous, I don't know where I've just marked now. If you look back on previous action, I took that on this just below this low. But if I was still in this trade, as soon as I see candles starting to get smaller or more wicks at the top, these got no wicks here. You got only a pullback to the 30. It's the first bit of the trade. So when these start wicking like this and it starts moving into like a range, this is when I would be stopping. So I wouldn't have took out. I'm not going to sit there and say I'd collect there or I'd collect there. I would probably more than likely collect probably I'd say around this area. So probably there. Probably after I see all these coming back down and then all these wicks above. This is showing me that this is a strong selling area. So that's where I would be collecting. Every time I see wicks like this, multiple wicks, failing to got a Marabuza, failing to push up, failing to break that, I would literally be collecting in this area from this trade. I will all in from there. But because I set already like this. So that's just showing what I would do with the Elliott wave. Now, with the Elliott wave as well, this wave here, say we've waited for this, we've got in on this pullback. This wave here, I would watch it like that. So you've got your wave, you've got your big wave 3 pullback. So you've got your big wave 3, you pull back, and your wave 5. Your big wave 3, you pull back, your wave 5. So for me, I would watch this. Obviously, if this Elliott wave's in time frame, say to 4-hour time frame, I'd watch this in the hourly, and I would literally wait for shorter, or I'd wait for these legs to be getting smaller before I start thinking about taking profit. Right. So this is all what I've updated. When it's read only, I can invite everybody. I'll just go over trade while this one here. I'm in a trade now. This trade at the minute. This one. This is what I've been waiting for, though. This is the trade I waited for, and if anybody now who's in my Discord channel, DaviddTech, you will see that these black lines, they have been there for ages. Well, they've been there from like 19th December, and I put this in, these black lines in, and I said because the main areas, I was looking at these are the areas that I wanted to see something. So this I waited for a long time. Got the hourly. Look how far away I got the hourly. I got the hourly on the 28th of November, which is quite a while away. So I had that marked out. Obviously, I had others. Mark out now up here. These marked out. And I don't think I got into this one. I don't think I got into it, even though it worked. It's the hourly. So it touched the hourly. POI, drop down time frame. I had BOS marked out here on a minute. Buying point, minute, the limit order, and so trade. For years to come. So, but then this is what I had order on for a while. Got this here, and I touched the hourly, drop time frame, marked out the breaker structure, and I fibbed from here. This black line is the high at the time. This is the low at the time from this break. So after this breaker structure, I found this put it on a lower time frame on this because it wasn't a candle in the 50, so it found it in probably marked it out, how long it took for it to hit. Just 9 days for it to hit, 9-10 days. First time it hit here, put it in the group in my SMC. Obviously, my limit order is just 30, which is there. This just missed. A lot of people got in on this. I didn't get in. A couple of people message saying I've got in. Like short a couple of dollars, but I eventually got put in there. Literally, not just with quite a bit. Obviously, this was a high that had been marked for ages, that had not been broke yet. Closed above from this here. Even though we pulled back here into a discount area, it was only below the 50, and I always wait for 60. So this could have been a possibility, but you would have been taking your profits here. But the TP on this below the line, and it stopped me out by that. Went and so I waited all month for this one trade, stopped me out by 25. And a few people marked a few areas out on this. I've seen the charts, what few areas, and time it's this one would have missed by a few dollars as well. This is your candle. Obviously, it's missed by literally $4. It's missed by $4, literally straight up. We've easily targeted this zone again. Not of a doubt. Target that area. Obviously, it's a strong selling area compared to the reds. Or after the reds comparison with the greens, and then obviously all this Christmas trading. But yeah, that's what I'm targeting. Stopped me out by a couple of dollars on this one. So it's by $dollars on this one. But today I cancelled all rest of my limit orders on Ethereum and BTC, and I'm in this trade at the minute. The reason I'm in this trade, because I put trades on my phone. I look at the charts here, and things there. So what I do is I go onto my ByBit on my phone and do it. So I set a limit order up. It was fine, and I entered here. When I realised it entered me straight away, it were up here. Still have this limit order opened. Break a structure there. We're touching candles. Down to this POI, even though we've not strongly rejected this area. So candle coming down compared to the candle up showed me then obviously this is my that's the most valid structure. So I count this as
your mic.
What's that? Sorry.
No, your mic was just cutting out, so I was just
Yeah.
letting you know. Yeah, okay. All right, mate.
Yeah. So this is what I marked out, the 15 minutes, and obviously, and then you can see where I fibbed from here to here. It's in this candle, and I thought, well, it's literally filled this one, so that's why I fibbed there to there, and I found that candle, and that's the limit I've set. Obviously, while I was setting it, I set one here as well. I didn't set this wasn't a limit, this was a market open, because the price was already there. I was setting it up as a limit, thinking I was putting this price in, looking at something else, and I literally straight in. So it's gone all right, to be fair, to say it were a mistake. So I'm all right, but I wouldn't have normally ended up. I wouldn't have even entered here because of the 30 zone. Obviously, remember what I said earlier. When you have a breaker structure, or you have a strong move up, and it only pulls back to the 30 zone, to the 30% zone, that move is not over until it comes. That's not a valid pullback. So it's not. I know that's not over, that move, and as I say, here we go again. Literally gone again. Anytime it pulls back to 30, I don't count it as a valid pull. Not all. It has to go down to at least 50%. Ideally 61 to 80%. So I've got ADA as well. ADA. I've got my order here, but because obviously BTC put me in here and shot off, I've got this. Yeah, I had fib. I got this alert today. I think I set it up tonight or something. We've come into our POI hourly, and I'm not saying this works on every coin because I've not tested on every coin. For me, I've only really tested it on Ethereum and BTC. But I set this alert, strong candles, a proper pullback, high point there. I set this as an alert, the alert today. So I've set my limit order up. Because the candle is big in the area, I've set my limit order. I normally do it above 30, but the candle's massive. Set it below. Stop loss is 7. Do a order 15 if it in get a winning trade. But the reason I've put it entry just above the 50 is because if it's 30, I think just a bit too for me. Just see. It's a 0.5 stop loss. I mean, it's not a lot, but for me it looks. But what have I got here? This was my Ethereum at the same time as BTC stopped me out. So I did this I was doing this on my phone. Stopped. This is a big stop loss for me as well. But I think I had lower level, but I think my stop there stopped me out by a tiny bit, and it's gone straight to the sell zone. But I was hoping for, this is a limit order I had set up. But like I say, it's been set up since of December, and I've cancelled them all now. I said earlier, I've cancelled all my my limit orders. This was literally touching. This was in the hourly POI. I dropped down time frames, and this was a break of structure on probably not the 15, probably the 10. It might have been 15, but 10. So I've literally fibbed from here, this low, to here, and I found this as a buy. I've had that limit set up today. I had another go here from the key level, because that's in this big and I got put in. So like I say, it's nothing's perfect. Don't always work. Maybe if I used a bigger stop loss, I'd still have that trade, or I've had that trade. But the whole point for me is trying to get a small. I know that's not 5-2, but I try and get as small stop loss as I can. I don't really want a big stop loss. I just don't like it. I don't know what's up with me. I don't like anything that big. I used to use like a 1%. I used to use even bigger on shit coins, but I don't try to get the lowest I possibly can now. Yeah, and it's stopped me out. Just a quick look on trade I want to show you on my FOREX pairs. That was a good trade. Risk to reward. I want to show you an even one. Find it. Find it. Trade to be fair. That's a decent trade. I've got a big trade somewhere. Structure. Did find one. Stop loss 2. Risk to reward 352. And this is, I think this is not, I don't think it's a complete yeah, there we go. So you've got the on lower time frame, you've got the hourly POI, you've got the 15-minute breaker structure. This would have been a first of a fail, but then if you had your key level in there with your breaker structure bounce, so obviously as I was saying in the course, break a structure bounce there, or even just your entry on the hourly POI. Stop loss just below. I didn't take this trade, by the way. Would have had an absolute monster of a trade. Look at that. No. There's no way of stopping that. And how I managed to get the P. Well, I managed to get the TP. I did it some kind of way, but what a trade. If I can get one of them, I'll be happy. So, yeah. Anyway, that's about me today. I could say my course is moved now. David puts it into a read only. Then I will be able to invite you all, just so it don't end up like this, because it's just horrendous. I've been putting stuff in, and then I just get a million questions or whatever. So I mean, it's not. I like helping people, I like chatting to people and that, but obviously I wanted to get it all finished first. So, but if this is a read only, at least I can then, all I've got left to do in here is I'll just tell you what I've got left on this course, and then I can move on to my next course. So I've got the Wyckoff, the Elliott. I won't go into massive detail in these. It's self-explanatory. I'm trying to keep things simple, trying to show people simple ways instead of getting your head all over the place looking at all this, and when you only need little simple things. Why make something hard what's already hard? So I've got Wyckoff, Elliott. I've got how to define the momentum of the waves, of any wave that you come across. I've got the pullback waves, how to do them. Pullback waves with no imbalances. And then I've just got like just random stuff then, just little bits, just like mistakes, how to be profitable with this strategy, what kind of risk to reward to be looking for, drawdown and stuff like that. Nothing much major. There's most of it's there. Most of it's already here, what you want to see. Other things are just like little bits of extra information that I'm going to put in. And then I've got like a run through of steps to apply all of this course. It's a full page long, just with steps. And then there's an optional, whether I want to put it in or not, you can tell me, with how to learn this course. It takes time, but I've got like, if you want me to put it in, I can put it in. It's just like how to learn this course. So you'll do bit by bit, and I'm sure a lot of people won't want to do it. So what you do is, this is how it starts. You go up first. You start off by looking for these. You mark these up on your chart. I think you have to find 50 of them. Then you mark your imbalances. Then you mark your breaker structures. You go down and try and mark out all your breaker structures. So you've back tested and found loads of breaker structures. Then you go and mark your pullbacks and breakouts. But it's tedious. But if you really want to learn how to do this, then I can put it in and show you how to do it. But to me, it's I've explained it in enough detail in these that you'll be able to spot it once you have a bit of practice. I mean, it's just so simple to see. You know, any child could listen, read that, and you know, follow it nicely, and it's good enough for anyone to follow. So yeah, if you want me to put it in, I don't really want to put it in because there's like 4 pages full. If you want it in, I can put it in. So the next time I speak to you, I will have this course complete. Then I will go on to maybe this one. It's a supply and demand course. What I've taken in the past. It's got a lot of information in there, so I can do that one, or do this one. I'll just work out how I'm going to do it, and I'll get back to you when I know what I'm going to be doing next. I have got this course planned and ready. I've also got another 2 courses that I've taken them already, but I need to plan them out and put them out like I have done here, everyone. If you want me to do any more, or you want to learn any more off me, I'll be more than happy to help you. Just let me know and just have a look. Yeah, no problem. I don't mind helping people, and thanks for all for coming. Thanks for time out of your day to watch my lives and checking out my course. Appreciate it. And David, over to you, mate.
Thank you very much. The episode brilliant as always. Thank you very much. Can you hear me? I think it's working, isn't it? Yeah.
Mm-hmm.
Yeah.
Yes, we can.
Yes. Thank you very much. Brilliant as always. Sorry, mate. What you gonna say?
How long did it go? Do you know?
Just been me 1 hour and 36 minutes.
Oh, bloody hell! I thought I'd be less than that, to be fair. But you start babbling on, don't you, when you get talking? It's just it's mad.
No, it's brilliant. Absolutely brilliant.
Yeah.
There was quite a few viewers on YouTube. You had a couple of questions about FOREX, which you looked at anyway.
Yeah.
Sorry.
Are they still on FOREX? Are they, or...
No, it was quite a while ago, but I also replied to a couple saying that they were saying hello, Happy New Year to you, and things like that. So
yeah.
So yes, yeah, 1 hour and 37 minutes. So thank you very much. What we're going to do, I think, Scope, is I'll build you a full section just for all of your content, because with the threads, I don't think you can make them read only. So William's going to contact you tomorrow morning, and that way you've got your whole own section inside Discord. It makes it easier for everybody to find it as well when you're ready to release it each time.
Yeah. Sorry. Yes, you can. You just must restrict user ranks to write in them. That's it.
Okay.
I can do that. No problem.
Fantastic. Thank you very much, Fred.
Well, if it's easier, just because if you're looking at this now, if it's easier, because like if I do this, then I've got this, there's all these and people don't want to see them. So if it's easier, we could just do like that and just have that pop in, and instead of a sub, a sub account, a thread account, just have SMC course, and then that's a chat. And then obviously, supply demand or whatever the next one I do, they'd just be easier for people.
Yep.
Or if you can do it like that, it's either way. I'm not bothered.
Yeah, we'll make it so it's easy for everybody to see, so they can find it easily. Because sometimes the sub threads are a little bit hard to find. So, but
yeah, and they disappear after so long, don't they? So, but if it's always there, people are always going to see it.
Yeah, absolutely. Yeah, absolutely. So what I'll do is I'll speak to William and Vlad tomorrow, and then we'll set you up a section inside the community, which is just for yourself.
I'm also going to be doing when this course is finished, which won't be long. Like I say, I've not got a lot left in it. I'm going to be doing videos on just small little videos on each of the so people have asked for it, so Let me just quickly go on to it. So I'm going to be doing like a small video on each of these, like discount premium. Then I'll do a
great
small
idea.
video on pull out breakout, just to go with it so people can just follow it and say, right, this is how I'll get my regular structures. This is how I get a pullback. This is how I do this. Just
great idea.
probably a
Yeah,
10-minute
great
video or something.
Yeah, great idea. Yeah, be much more digestible for everybody to be able to see it in smaller formats, without doubt.
Yeah.
Yep.
Yeah,
Thank you
man.
very much. Thank you very much for everybody. Thank you everybody that was watching on YouTube. Thank you very much to you, of course, Scope, and thanks to Vlad and William. And that's it. Have a nice evening, everybody.
Right.
Take care. Good evening,
Good night, everyone.
Bye, everybody. Take care, everybody.
See you later.
Bye.
Bye.